All right, listeners, get ready because today we are going deep into Indian retail.
Diving right in.
Exactly. And, we always pick fascinating companies to explore, but this one is really interesting.
Yeah, I'm excited for this one.
It's Avenue Supermarts, the parent company of Dmart.
Dmart. I
Yeah.
mean, they've just quietly become like this retail giant.
Yeah, they have.
Eh.
And you guys, are amazing listeners.
The best listeners.
Yes, they sent us this stack of annual reports. And I got to say, these things are dense.
Oh, yeah, they're packed.
Hundreds of pages.
It's a lot to get through.
Yeah, it is. But that's what we do here at the Deep Dive.
That's right, we break it down.
We break it down. We're going to sift through all of it, extract the golden nuggets, all the good stuff. We're talking revenue growth, profit margins,
Store expansion.
all that good stuff. You ready to dive in?
Let's do it.
All right. Let's start with some numbers because Dmart, they are not just some little grocery store.
No, not on.
They've got a whopping 365 stores all across India,
Huge.
covering 15 million square feet of retail space.
That's a lot of square feet.
It is. And hold on to your shopping carts, folks, because their last fiscal year saw revenue jump to almost 50,000 crore rupees.
That's serious growth.
That's a lot of groceries.
It really is. But to get a sense of, how incredible that is, you got to look at the bigger picture of the Indian retail market.
Right. Give us some context.
Yeah, so this market, it's booming. It's estimated to be worth, get this, 93 trillion rupees and growing at like 11% annually.
Whoa.
Dmart is definitely riding this wave, but they're doing more than just, being in the right place at the right time.
Yeah, they've got a plan.
They definitely have a plan, a strategy.
Right. And, one thing that just jumps out from these reports right from the beginning
Oh, yeah.
is their everyday low cost, everyday low price strategy.
EDLCEDLP.
Yeah, they call it that, EDLCEDLP. Basically their mantra.
It really is. And it's more than just a slogan. It's like baked into every single part of their business.
Right. And it obviously resonates with customers.
Oh, yeah, for sure. Indian consumers are very, very price conscious.
Of course.
Yeah.
Makes sense. So it's not just about slashing prices.
Right.
It's about building a whole system, an efficient system.
Yes.
That lets them keep costs low so they can pass those savings on to customers.
Exactly.
Now, speaking of keeping costs low, can we talk about inventory turnover?
Yeah, definitely.
The latest report, it mentions this figure of 14.61.
Huge number.
Now, I'm no retail expert,
Well,
but that sounds like a lot of product
oh, yeah.
moving in and out.
Constant movement.
Right.
Think about it this way. That number means that Dmart is selling and restocking their entire inventory almost 15 times a year.
Whoa. Okay, that's wild.
It's a retail whirlwind.
It really is. So,
Yeah.
but what does that actually mean for, for the average shopper?
For you and me.
Yeah.
Well, it means that you are getting fresher products, and also it keeps those prices low for you.
Oh, so it's a win-win.
Win-win.
Okay, so they're really running a tight ship,
Very efficient.
which is good for them and their bottom line.
In our,
Exactly. I'm starting to see why Dmart is this, retail powerhouse.
they've got it figured out.
Yeah. But it's not all about, low prices and efficiency.
Right.
They seem to be really focused on sustainability, too.
Yeah, they are. And it's really interesting how they've woven it into, all parts of their business.
Yeah. For example, they've achieved green building certifications
Oh, yeah.
for 217 of their buildings.
217.
And 38 of those have even earned gold certification.
Wow. That's impressive.
It is under the U.S. Green Building Council's LED program.
Which is the gold standard.
Yeah, it is. And they even have this whole system for recycling packaging waste
Uh-huh.
and using IoT technology to watch their energy consumption.
Very cool.
They're thinking about the planet and their profits.
For sure. They're genuinely invested in sustainability.
Yeah. And they're transparent about it too. Their annual reports lay it all out.
Absolutely.
Okay. So we've seen their commitment to low prices, efficiency, and sustainability.
It's impressive.
It is. But every business faces challenges, right?
Of course.
What are some of the risks that Dmart might be facing?
That's a great question because even the most successful companies, they have to adapt. And one of the biggest challenges for Dmart is probably the rise of e-commerce.
Oh, right.
Online shopping is getting more and more popular in India.
Especially with the younger generations.
Definitely. So it's they've got to figure out how to bring their everyday low-cost model into the digital world.
Right, because they're primarily a brick-and-mortar operation.
Right.
They've done a little bit online, but not a ton.
They'll have to adapt to keep up with how things are changing.
Customer habits are changing.
Totally.
Right. So that's one challenge. What else?
Well, another one is the increasing bargaining power of suppliers.
What do you mean?
So, as organized retail in India grows, big suppliers might start demanding better terms.
Oh, I see.
And that could squeeze Dmart's margins, which are already pretty thin.
Oh, right, because they're keeping prices so low.
Exactly. So they're in a tough spot. They're trying to keep prices low for customers, but also manage these potential cost increases from suppliers.
It's like a balancing act.
It really is. And of course, they've also got to stay on top of evolving consumer preferences.
Right. What people want is always changing.
Especially younger shoppers and people with, more money to spend.
Yeah. So they need to stay relevant,
Yeah.
appeal to new generations.
Definitely. While keeping their core value proposition intact.
That's a lot to juggle.
It is. But one thing I really liked when I was going through these reports was their transparency.
Oh, yeah.
They don't shy away from talking about these risks. They even have a whole section in there about risk management practices.
That's good. They're taking it seriously.
Yeah, they're not just sitting back celebrating their success.
Right.
They're actively planning for the future and thinking about how to deal with these challenges.
Well, that's great to hear.
It is.
All right. So we've covered a lot in this first part of our deep dive. We've explored Dmart's impressive growth, their EDLP strategy, their focus on efficiency and sustainability, and the potential challenges they're facing in this competitive market.
It's a lot to think about.
It is. Now, get ready to go even deeper as we break down Dmart's financial performance in part 2 of this deep dive.
This is where it gets really interesting.
Stay tuned.
Can't wait. Okay, so let's dive into the numbers and really dissect Dmart's financial performance.
All right, let's do it. My calculator's ready.
Perfect. So one of the key metrics we always look at is operating profit margin.
Okay, now remind me, what does that actually tell us? Like, in simple terms.
Basically, it shows the profit they make from their core business operations, like running the stores,
Gotcha.
before we factor in things like taxes and interest.
Okay, makes sense.
So it really gives us a good sense of how efficiently they're running things, how well they're managing costs.
Makes sense. So higher operating profit margin means they're doing a good job keeping those costs in check.
Exactly. Now, looking at their latest report, Dmart's operating profit margin was 7.38%.
7.38%. That seems decent. But is that considered good for a company like Dmart? Especially with their focus on low prices.
That's a great point. You're right. Value retailers usually operate on thinner margins compared to businesses selling, higher priced items.
Makes sense.
But even within the value retail world, there's a range.
Right.
And compared to some of their competitors, Dmart's operating profit margin is actually pretty healthy.
Oh, interesting.
Yeah.
So it seems like they figured out that balance
Yeah.
between offering those low prices, but also maintaining a decent level of profit.
Yeah, they're walking that tightrope.
They are. Now, how does that 7.38% compare to previous years? Have they been able to keep it consistent?
Another great question. This is where having all these annual reports comes in handy. You can see the trends.
Yeah.
So looking back, their operating profit margin was a bit higher the previous year at 7.84%.
Oh, so a little dip.
A slight dip, yeah.
Is that something to be concerned about? Or is it just normal fluctuation?
Well, any dip in profit margin, you got to investigate.
Right.
It could be a bunch of things, increased competition maybe, rising costs of goods, or even, a strategic decision to maybe prioritize market share over short-term profit.
Right, so they're playing the long game.
Yeah, exactly. We need to look closer to understand what's driving this change.
Okay, detective hats on.
Let's do it.
Where do we start?
Well, let's break down their operating costs. That's where we'll find the story.
Okay.
We need to see how much they're spending on rent, labor, all those expenses.
All right, sounds good. Now, I know Dmart owns a lot of their store locations.
Yeah.
But they also lease some spaces, right?
They do.
So how do those rental costs play into their overall spending?
That's a big one. And this is where Dmart gets really interesting.
Okay.
They've got this strategy where they buy properties in areas where they know real estate prices are going to go up.
Smart.
Over time. It gives them this long-term advantage.
I see.
So as property values rise, their rental costs stay pretty stable.
Makes sense.
While their competitors who are leasing might face increasing rent.
They're playing chess, thinking several moves ahead.
Exactly. They're anticipating those future costs, building in a buffer.
That's impressive.
It really shows their understanding of the Indian real estate market.
Yeah, they know what they're doing.
Yeah.
Okay, so rent seems to be under control. What about labor costs? They've got hundreds of stores.
Right.
They must have a pretty significant payroll.
They do. And remember, they're big on employee training and development.
Right, we talked about that.
Which can lead to, higher productivity, lower turnover.
On-term benefits.
Exactly. But in the short term, it does mean higher labor costs.
So it's a trade-off.
Yeah, it's an investment in the future.
Gotcha. What about other expenses? Anything else impacting those profit margins?
Well, we're in this period of global inflation, so you got to assume Dmart is facing rising costs like everyone else.
Yeah, for sure. Energy, transportation, the goods themselves.
Everything.
Right. So they're dealing with a lot.
They are. But remember, they're using technology to monitor energy use.
Oh, right.
Catch problems early on.
So that helps.
It does. Their commitment to sustainability is good for the planet and their bottom line.
I like that. A win-win.
Always a win-win.
All right, so we've looked at operating profit margin, broken down their costs, and started to understand how they're managing all that in this crazy environment.
Yeah.
What's next on our financial checklist?
Let's circle back to inventory turnover, that impressive number we saw earlier.
Okay, the 14.61.
Right. It's great to know the number, but we need to understand what's behind it.
How are they pulling that off?
Well, their annual reports talk a lot about forecasting demand and minimizing the time goods spend sitting on shelves. So it suggests they have a really, really efficient supply chain.
So it's more than just buying low and selling low.
Way more.
It's like a carefully choreographed dance
Exactly. They're probably using some pretty advanced data analytics.
to predict demand and all that.
Yeah, making smart purchasing decisions.
So that all contributes to those low prices.
And keeps the business profitable.
Wow, it's impressive. Okay, so we've covered operating profit, operating costs, and inventory turnover. What else should we check out?
Let's look at their debt levels.
Oh, right. Because companies use debt to grow, but too much can be dangerous, right?
Exactly. It's like a loan. Can be helpful at first, but if you can't keep up with payments, it becomes a problem.
A big problem.
We need to understand how much debt Dmart has, what they're using it for, and if they're managing it well.
All right, let's dive in. Now, I remember reading something about Dmart using funds from their IPO and a QIP to pay down some of their debt.
Yeah.
Does that mean they're debt-free now?
Not completely. They significantly reduced their debt, but they still have some.
Okay.
Their latest annual report shows a debt-to-equity ratio of 0.02.
0.02. Now, for those of us who don't speak finance, what does that even mean?
Good question. Basically, it means Dmart is mainly using their own money rather than borrowed money to finance their operations. It's a low ratio, generally a good sign, less financial risk.
So they're being careful, responsible.
Yeah, not relying on those loans to grow too quickly.
Interesting. They really do seem to approach everything with this long-term view.
Yeah, they think ahead.
It's impressive.
Yeah.
So overall, what's your assessment of Dmart's financial health?
Based on everything we've seen, they seem to be in a really strong position.
Good to hear.
They've managed impressive growth, healthy margins, and kept that debt under control.
Yeah.
Their focus on efficiency and long-term sustainability, it really shows in those numbers.
That's great to hear. Now, I know we've been throwing a lot of numbers and financial terms around.
It's a lot to take in.
What are some key takeaways for our listeners about Dmart's financial strategy?
I think the big takeaway is that their everyday low-cost commitment, it's not just marketing. It's deeply embedded in how they operate.
It's the core of their business.
Exactly. They prioritize efficiency, cost management, and thinking long-term. And it's paying off.
It's proof that focusing on those fundamentals can really lead to amazing results.
Couldn't agree more.
All right, we've covered a lot of ground in this deep dive. We've explored their growth, their business model, their commitment to sustainability, and of course, their financial performance.
It's been a journey.
It has. But there's one more crucial area we need to explore. Their store expansion strategy.
Oh yeah, that's a big one.
Get ready to dive into Dmart's growth plans in the final part of our deep dive.
Can't wait to see how they're conquering the retail landscape.
Stay with us.
Welcome back for the final part of our Dmart deep dive.
All right, we're in the home stretch.
We've analyzed their financials, their low price strategy, their sustainability efforts, but you don't become a retail giant without a solid growth plan.
Right, expansion is key.
So let's talk about how Dmart is growing.
Okay, paint the picture for me. They've obviously come a long way from that one store back in 2002.
They really have. As of March 2024, they've expanded to 365 stores.
Wow, that's impressive.
It is. And the interesting thing is, their expansion has been so strategic and deliberate.
So they're not just opening stores everywhere, they're being picky.
Yeah, they're not just chasing every opportunity, they're choosing locations carefully.
Okay, so what factors are they considering when deciding where to open a new store?
They're looking at things like population density, income levels in the area,
Makes sense.
and even how much competition they'll face.
Right. Got to scope out the competition.
It's about finding those sweet spots where their value proposition really resonates.
Where they know customers will be receptive.
Exactly. And they're not just focused on big cities.
Oh, interesting.
Their report highlights expansion into Tier 2 and Tier 3 cities.
Smaller cities.
Yeah, they set a big opportunity in serving a wider range of Indian consumers.
That makes a lot of sense.
Yeah.
There's a huge population outside those major metros.
Definitely.
And those consumers are price conscious too.
Absolutely. It's like they're making affordable goods accessible to everyone.
It's a smart move.
Yeah.
And it's not just about geography, right? They're also trying out different store formats.
They are. They're adapting their model to fit different needs.
So give me an example.
Well, the report mentions a new, smaller store format specifically for those densely populated areas.
Where a big store wouldn't work.
Exactly. It's like tailoring the Dmart experience to the local environment.
It's smart. They're flexible.
Yeah, they're thinking it through. And to make sure those stores run smoothly, they're using technology in some pretty cool ways.
Oh, like what?
They've implemented this system to track customer traffic.
So they can see how people move through the store?
Exactly, and analyze shopping patterns.
So they're not guessing what customers want. They're using data.
Data-driven decisions.
I thought it'd be helpful for things like store layout.
Definitely. Product selection, even planning promotions.
Yeah. So it all ties back to their focus on efficiency.
Right. It's like they're constantly fine-tuning everything.
Always improving. Now, Dmart isn't operating in a vacuum. There's competition out there.
Of course. The Indian retail market is pretty dynamic.
Who are some of their main rivals?
Well, you've got the traditional mom-and-pop shops, modern supermarkets, and then the whole e-commerce world exploding.
Right. So many players.
Yeah. Some of Dmart's biggest competitors are Reliance Retail, Big Bazaar, Spencer's Retail.
Big names. So what are some of the key trends shaping this competitive landscape?
One big trend is the rise of omni-channel retail.
Omnichannel.
It's all about creating a seamless experience whether you're shopping online or in a physical store.
Oh, I see.
So retailers are investing in connecting those two worlds, offering things like click and collect or home delivery.
It's about giving customers options.
Exactly, flexibility and convenience are key.
Definitely.
What else? Another trend is the growing popularity of private label brands.
Oh, right. Their own brands.
Yeah, retailers are realizing they can boost profits and stand out by offering their own exclusive products.
Build customer loyalty that way.
Absolutely. And lastly, we can't forget about the emphasis on sustainability.
That's been a theme throughout our Dmart deep dive.
It has. And Dmart seems to be ahead of the curve with their green initiatives.
Yeah, they're walking the walk.
They are. Their commitment to sustainability is really clear.
Okay, so we've explored Dmart's growth, their business model, their commitment to sustainability, their strong financials, and their ambitious expansion plans.
Phew, we covered a lot.
We did. As we wrap up this deep dive, what's your final takeaway for our listeners?
I think Dmart's journey is a testament to the power of focusing on value for the customer.
Those everyday low prices,
Exactly. But it's more than just an idea. It's about execution.
putting it into practice.
They've built a business that's efficient, financially sound, and environmentally conscious.
It's a model for success in today's retail world.
Definitely. It shows that focusing on the fundamentals can still lead to amazing results.
Well said. Thank you for joining us on this deep dive into the world of Dmart.
It's been a pleasure.
We've only scratched the surface, so if you're curious to learn more, be sure to check out their full annual reports.
Yeah, there's a lot more to discover.
You'll find links in the show notes.
Happy reading.
And until next time, keep exploring, keep questioning, and keep diving deep into the fascinating world around us.